Hey everybody, Alex here. Welcome back to Pendria Finance. In today's video, we are talking about a very important concept to understand, especially as a beginner. And a lot of the times, even, more advanced people that have been investing in the stock market for quite a while don't understand this concept. And if you don't understand this concept, not only will it be harder to make money, but when you are losing money, it's going to be way harder to make logical decisions about your investments, to not only reduce losses, but to think of your opportunity cost going forward with either other investments or that particular investment. So what are we talking about here? Well, we are talking about when you have a loss on your position, on your long stock, on your options, on whatever the case may be. When you have a loss, we have to understand what it takes to make that money back, because this is a lot of times what happens. I'm in a trade and I'm in a loss. Oh, okay. Well, it just has to recover, right? And it will recover. And we have this faith that the stock will recover because, stocks are volatile. Sometimes, especially options, they're up, they're down. But what does it really mean for a stock or a position to recover? So I'll give you some statistics here for you. And this is, again, something that, look, even me in the beginning, and for the longest time, really, I didn't really quite grasp this concept. And if you don't understand this, then it's going to make your decision making much harder going forward when you're in the loss position. So let's take a look at some of the statistics. If you have a 10% loss on an investment, then you need to make your money back, you need an 11% gain, all right? So again, this is all percentage terms. If you have a 20% loss on a position, well, now to get back to zero, you need a 25% gain in that position, in that stock, to get back to zero, okay? So more than the loss, right? So if you just see a loss of 20%, you might think, oh, all right, well, it needs to jump up. And I wish it would go back up 20, but if it goes up 20%, the amount that it went down, it will not reach your zero mark, right? It won't reach even. Now, jumping up to 50%, if you have a 50% loss in a position, how much does the stock have to move back up to get back to break even? The correct answer, yes, you got it. I heard you screaming at the screen because you know it already. It's 100%. So if you have a 50% loss in a position, you need that stock to move 100%, double. You need the stock to double to get back to zero, okay? So some of you out there might just for the first time be realizing this, and trust me, same thing with me. So don't be embarrassed if you did not know this or you did not grasp this concept. Let's take it a step further. Let's go 90% loss, right? In some stocks at some point, when there's a dip in the market, like now we have 50, 60, 70, 80% losses on some of the companies, right? Especially these SPACs, right? These new companies that just come up and are overvalued. They have a 90% loss. How much does it need to get back to even? How much does that stock need to go up? Well, the correct answer is 900%. The stock has to jump up 900%. So double until you get 900% gain to just get back to even. So now let's take a look at something else, right? And it is the average gains in the stock market. And as you may already know, the average yearly gains in the S&P 500, let's say over a long period of time, the average gains is 10%. So let's think about this and apply it to what we already now know about our percentage terms, gains and losses. So if we already are down in our position 10%, right, then we have to hope that the benchmark holds true in a year of gains to make that percentage back, that 11% gain to get back to even, all right, around a 10-11% gain. So you can see that very quickly when we start thinking about it in our average returns in the stock market, we could understand where we should be capping our losses for an individual trade or an individual long stock position, depending on a few things also, but this is in general terms how we should be thinking about this, or at least how I'm starting to think about this in my investing. When we're at a 20% loss in an investment, well, we know we need 25% gain. And now we take a look at what the investment is and what the chances of that investment gaining 25% is. Okay, so this is, more than double the average stock market return on average over a long period of time. This is double that. So can that investment make double the returns to get back to even? this might go into your decision making if you want to keep your investment into this or you want to cut your losses and move forward. This is also going to affect the stop loss that you put on a position, all right? So if you're into a position that you know is about similar to the overall market returns, and you're down 20% on it, then you might think, well, I don't want to get to that 20% loss because I know it has to gain 25% for me to break even. So I'm going to set my stop loss at 10% or 15% or whatever that case may be. If it's a mental stop loss, if it's an actual stop loss, you have to be prepared to understand this before going into the investment, all right? If it's a 50% loss, then you know that investment needs to double. So maybe you don't want to get to the point where your position loses 50%. And this could be the same apply to option trading, to option investing long term, right? If you're in leaps, for example, this is something I take into account. And I know that, look, if my leaps are going to be down 10%, 15, 20%, okay, that's pretty, if it's down 50%, then especially with the theta decay and especially with, again, other factors into the decision-making process, then you can take a step back and say, wow, okay, now I understand this trade better. I understand overall this position better. And a lot of the times people don't do that, right? Especially beginners. They go into a position and they don't factor in, oh, we're just down 90%. Well, okay, now you take a look at what we spoke about. 900%, it has to recover just to break even. Now, is that possible over a long period of time? Yes. I mean, there are stocks that have gone down 90%. Think of the dot-com bubble, right? I think Amazon at some point was down 90%, but Amazon was an outlier of the whole dot-com craze, right? You have all the stocks that did not recover because, first of all, they were way overvalued and they weren't even making any money. So, all right, down 90%, but now it's literally impossible at this point for some of the companies that weren't making money at that point to recover, okay? So again, don't look at the outlier and say, it is possible because this one company did it. Take a look at the overall market, the overall percentage it needs to recover, and think logically, what are the chances that it will recover? What are the chances that I'll get back to break even? Should I cut my losses? What should I do? And this is also a decision-making thing when you're dollar cost averaging into a losing company. It's losing, losing, losing. Good. So we know that. We know the overall understanding of when you have a loss, we need that gain. We know to take a step back and to understand our stop losses or our mental stop losses of when we should bail out on a position. And then we take all of these factors into account, plus other things, your risk tolerance, whether the trade is if it's an option trade going to expire, right? So there's other factors on top of it based off of your individual investing. We could take a look at all of that, and then we can make a more rational, logical decision on your investing, okay? So this is what I wanted to talk about in today's video. This is something that everybody should understand before jumping into an investment and then being in a situation where, okay, I don't know what to do now, okay? So I hope you learned something from this. If you did, you know what to do. Hit the like button, subscribe if you haven't already. Check out my other videos down below if you want to see what I'm investing in. Of course, my Patreon link is down below as well. Thank you for watching, and we will see you on the next video. Pandrea out.